If there were a base case heading into the U.S. midterm elections, it was a case which projected the Dems regaining control of the House. But as per our analysis in the lead up, the tricky part is exactly what the market is going to do with these results. The upside here is the part that all market participants crave, and that's the volatility part. In the immediate aftermath, we've been seeing the US dollar under pressure and stocks bid up, presumably on the view that this election result will put the brakes on the administration's populist ambitions and welcome a de-escalation of trade war tension. But while faith in volatility is what we do have, it's the direction part, particularly with respect to rallies and stocks, where we would recommend proceeding with caution. We've highlighted just how easily the market will be able to argue for any direction based on whatever the result, and before the day is out, what may now feel like a vote of confidence to stocks could be looking like a nightmare on worry of the mess that is now a less clear and cohesive U.S. government. Ultimately, the market will go where it wants to go and will always find a reason to get there, irrespective of what might otherwise be fundamentals that would argue against it. We expect that volatility to be there in the hours ahead, but continue to hold with the view that the U.S. dollar will indeed be at greater risk of a move to the downside, all while U.S. equities are sold into rallies. This is a view that considers the impact of Fed policy normalization first and foremost, and a view which sees the FX market having priced Fed hawkishness maybe a little too much in the middle of the curve, and a view that sees the stock market still not pricing in enough of the negative impact of normalization, with rates sitting at closer to normal levels, valuations looking a lot less attractive, and investor immunity to downside risk no longer there as it once was. The market will continue to digest all of this in the sessions ahead, and will also need to get ready for Thursday's Fed decision, which stands out as that next big event risk on the calendar. As far as today's economic data is concerned, we get German industrial production, Eurozone retail sales, and Canada IV PMIs, and earlier today, the New Zealand dollar was loving a solid Kiwi employment report, with the currency flying high on the back of this added push, up nearly 1.5% into the European Open. Keep an eye on any Brexit headlines as well. That's all for now.